you know you can write off 100% of your car as a business? Sounds enticing, doesn't it? Welcome to this enlightening journey where we unravel the secrets of how entrepreneurs can claim their car as a business expense. This strategy not only reduces your taxable income, but also aids in significant money saving. We will dive into the benefits, eligibility, process, and even the common pitfalls to avoid. So if you're ready to explore this financial strategy, stay tuned. It's time to learn how to take advantage of this financial strategy. Before we delve into the process, let's grasp what a business write-off is. Imagine you're out shopping. You see a sale sign that reads, "Everything 20% off." You feel a rush of excitement because you know you'll be saving money. A business write-off works in a similar way, but in the world of taxes. In simple terms, a business write-off is an expense that can be deducted from your taxable income. Let's say you run a business and you make $100,000 in a year. Now, throughout that year, you've spent $10,000 on business expenses like office supplies, equipment, or perhaps a car used for business purposes. These expenses can be written off, meaning they can be deducted from your taxable income. So, instead of paying taxes on the full $100,000, you'd only pay taxes on $90,000 because you've written off the $10,000 in business expenses. This reduces your overall tax bill and helps you save money. Now, why is this beneficial for entrepreneurs, you may ask? Well, entrepreneurship often involves significant investments and risks. Business write-offs act as a form of relief, allowing entrepreneurs to reduce their taxable income and consequently, their tax liability. It's like having a sale on your taxes. However, it's crucial to remember that not all expenses can be written off. The Internal Revenue Service, or the IRS, has strict guidelines on what qualifies as a legitimate business expense. It's always wise to consult with a tax professional to ensure you're accurately applying these deductions and staying within the bounds of the law. So in essence, a business write-off is a powerful tool that can help entrepreneurs manage their tax obligations more efficiently. It's a way of making your money work harder for you. And who wouldn't want that? With a clear understanding of business write-offs, you're ready to learn how to apply it to your car. Not everyone can write off their car as a business expense. There are certain criteria to meet, and that's what we're here to talk about in this segment. To begin with, one of the most critical factors is that the car must be used solely for business purposes. What does this mean? Well, it's pretty straightforward. The vehicle in question should not double up as your family car or be used for personal errands. It's all about business all the time. But wait, there's more to it. The Internal Revenue Service, or IRS as we often call it, is not just interested in whether your car is used for business. It also wants you to keep a record of all business-related travels. This includes the date, mileage, and purpose of each trip. This is a non-negotiable requirement, so if you're not already doing this, it's time to start. There are also some nuances to consider. For instance, if your vehicle is also used for personal purposes, you can only write off the portion of expenses that are related to business use. This means you'll need to keep track of both personal and business miles to accurately calculate the percentage of business use. Now, you might be thinking, what if I work from home? Can I still write off my car as a business expense? The answer is yes, but only if you're using your vehicle to travel for business-related activities like meeting with clients or suppliers, attending business conferences, or running business errands. It's also worth noting that the IRS has set some strict standards to determine whether your car expenses are ordinary and necessary. Ordinary means that it is common and accepted in your trade or business, while necessary implies that it is helpful and appropriate for your business. And there you have it, the eligibility criteria for writing off your car as a business expense. Getting this right is the first step towards making the most out of your business expenses. Now that you know if you're eligible, let's move on to the process of writing off your car as a business. Finally, we're at the heart of the matter, the actual process of writing off your car. This journey is not as arduous as it appears. It's all about understanding the steps and following them diligently. So buckle up and let's dive right into it. The first step is determining the value of your car. This isn't a whimsical guesswork game. It involves some research. You'll need to know the fair market value of your car, which you can find on websites like Kelley Blue Book or Edmunds. They provide a value based on your car's make, model, year, mileage, and condition. So don't forget to have these details handy when you log on. Now on to the second step, calculating depreciation. Depreciation is the decrease in your car's value over time due to wear and tear. The Internal Revenue Service, or IRS, allows you to claim this decrease in value as a deduction. To calculate depreciation, you'll need to know your car's depreciation rate. This can be found in the Modified Accelerated Cost Recovery System, or MACRS, a tool provided by the IRS. Here's a quick example to illustrate this. Let's say you bought a car for $30,000. In the first year, the MACRS rate is 20%, so you can claim a $6,000 deduction in the first year. In the second year, the rate is 32%. Now you don't apply this to the original cost, but to the remaining value. So your deduction in the second year would be $7,600. As you can see, the amount you can claim increases in the second year, even though the car's value is decreasing. Step 3 is all about keeping track of your expenses. This includes gas, maintenance, insurance, and even parking fees. Remember, these expenses are deductible only if they are business-related. So, if you use your car for both personal and business purposes, you'll need to keep a detailed log of your business miles. This will help you determine the percentage of total car expenses that can be deducted. The fourth step is filling out your tax forms. The form you'll need is called Schedule C, Profit or Loss from Business. Here, you'll report your car expenses and depreciation. Remember, when filling out this form, honesty is the best policy. The IRS has a keen eye for discrepancies, so it's important to provide accurate information. Finally, the fifth step is to consult with a tax professional. This step is optional, but highly recommended. Tax laws are complex and ever-changing, so having a professional by your side can provide much-needed peace of mind. They can ensure that you're maximizing your deductions while staying within the boundaries of the law. So, to recap, writing off your car involves determining its value, calculating depreciation, tracking expenses, filling out tax forms, and possibly consulting with a tax professional. Each step is vital, and skipping one could lead to missing out on potential deductions, or worse, facing penalties from the IRS. With these steps, you're on your way to saving more money on your taxes. It's not just about reducing your tax bill, but also about making the most of your resources. Remember, every dollar saved is a dollar earned. So don't let unnecessary tax payments drive a wedge between you and your business's financial growth. Now, you're in the driver's seat, ready to steer your business towards more savings and success. As with any financial strategy, there are common mistakes you should avoid. One of the most common mistakes when trying to write off your car as a business is not keeping accurate records. You might think that a quick note on your phone or a mental reminder would suffice, but the Internal Revenue Service, or the IRS, requires detailed logs. These logs should include the date, the business purpose of the trip, the destination, and the number of miles driven. If you find maintaining such records tedious, consider using a mileage tracking app. It can automatically log your trips, making the process simpler and more efficient. Another common pitfall is trying to write off personal travels. It's essential to remember that only the business use of your car can be written off. If you use your car for both personal and business purposes, you need to calculate the percentage of time you use it for business. Only that portion can be claimed as a business expense. Claiming personal travels as business expenses can lead to penalties if the IRS decides to audit your returns. Yet another error entrepreneurs often make is overlooking depreciation. When you use your car for business, you're allowed to claim depreciation, which can significantly increase your write-off. However, calculating depreciation can be a complex process, and many tend to skip it. It's advisable to consult with a tax professional or use tax software to accurately calculate and claim depreciation. Also, remember that the rules for writing off your car can change from year to year. Failing to stay updated on the current tax laws can result in missed opportunities for deductions or non-compliance with the regulations. Lastly, many rush to write off their car without considering if it's the best financial strategy for their situation. While writing off your car can provide tax benefits, it might not always be the best option. It's crucial to evaluate all possible scenarios and make an informed decision. By avoiding these mistakes, you can make the most out of your car write-off. Writing off your car as a business may seem daunting, but it doesn't have to be. Let's take a few moments to revisit what we've covered in this video. The process of writing off your car as a business expense isn't as complex as it might initially seem. It's a matter of understanding the basics, knowing your eligibility, following the correct process, and avoiding common pitfalls. We started by discussing the concept of business write-offs. These are expenses that a business incurs and can deduct from its taxable income, thereby reducing the overall tax bill. We learned that the IRS allows businesses to write off certain costs associated with a car, such as gas, maintenance, and even depreciation. In essence, if you use your vehicle for business purposes, there's a good chance you can write off some, if not all, of the costs. We then moved on to the eligibility criteria. This is where it gets a little tricky, but not insurmountable. The key point is that the car must be used for business purposes. This doesn't mean you can't use it for personal trips, but the primary use must be for business. To be eligible for a full write-off, the car must be used exclusively for business. However, if you use it for both personal and business purposes, you can still write off a proportionate part of the expenses. Next, we walked through the actual process of writing off your car. This involves keeping detailed records of all your car-related expenses and business mileage. You can choose to use the standard mileage rate, which is a fixed amount per mile, or actual expenses, which includes all the costs associated with operating the vehicle. Whichever method you choose, it's crucial to maintain accurate records and receipts. We also touched on common mistakes to avoid. One of the biggest pitfalls is not keeping proper records. This can lead to missed deductions or issues with the IRS if you're audited. Other common mistakes include not understanding the difference between personal and business use, and not consulting with a tax professional when necessary. Which brings us to our final point. If you're unsure about any aspect of writing off your car as a business, don't hesitate to consult with a tax professional. They can provide guidance tailored to your specific circumstances and ensure you're taking full advantage of the tax benefits available to you. In conclusion, writing off your car as a business can be a smart financial move. It allows you to reduce your taxable income and potentially save a significant amount of money. While the process may seem a bit complex, with a clear understanding of the basics, a grasp of the eligibility criteria, a commitment to record keeping, and a willingness to consult with a tax professional when necessary, it becomes far less daunting. Remember, every cent counts when you're running a business, so why not take advantage of the opportunity to write off your car as a business? It's a smart financial move that could save you a significant amount of money